guys, thank you so much once again for joining me here at Commercial Property Club, our podcast, where we share value-add information with our network of investors. It's our pod chapter number 40. What a wonderful privilege to be with you here today. It's always exciting to share value-add information when it comes to commercial properties and when it comes to income-producing properties, assets like apartments and triple nets, and as well as warehouses and senior living. But today we're focusing more on the apartment sector of income-producing property in commercial real estate. It's a wonderful privilege to always share with you valuable information when it comes to that aspect of income-producing property. Today we'll be dealing with apartments. So today, stay tuned before we dive into this so hectic world, or rather, productive world of asset investments. Stay tuned and I will be right back. Thank you once again for joining me. It's so good to have you here on today's show, pod chapter 40. And today we'll be looking decisively in a very important aspect of income-producing property in the apartment sector. What's going on at this present time. And today's topic, I've decided to look up, or rather put together, the state of the market in the DFW area. I'm sure by now we know that that's a booming market when it comes to apartment investments. So today's topic would solely be upon, or rather be with exact topic that I tag DFW apartment investment market. What is happening in first quarter of 2026. I'm just about to give us an update of what's going on in the apartment sector here in the Dallas-Fort Worth area. We all know by now that the Dallas-Fort Worth area is a booming market. It's been like that for a number of years, and we're glad to still be on top of the market, on top of the food chain of apartment investment, if I may put it that way. So the big D rebound, that's what I'm going to start with. You know what? Like I said, I'm still your host here at Commercial Property Club podcast. My name is Ola Ibiwoye. Now, we would normally look at what is the state of the market here in the Dallas Metroplex area. We want to look at some numbers. I want to share with us some numbers today that would give us an insight into the updates of what is going on in this particular market in this time of the year, which is about to round up in terms of the quarter. We're about to round up the fourth quarter. I want us to look at some aspect. We're officially closing the books on the first quarter of 2026. Our time flies. And if you've been watching the north aspect of Texas, the skylines, you will know that the narrative is that there's going to be, or rather there's already a shifting. For the last 2 years, the big D standing for what I call delivery, the big D as in capital D. Delivery here in the Metroplex. We have a record-breaking waves of new constructions going on in the apartment sector, as you probably already know, or you've been seeing cranes, you've been seeing work sites, you've been seeing apartments springing up in neighboring cities of the DFW, even in the Dallas per se, the Fort Worth city per se. You see apartments springing up, new construction. So it's a strong portfolio, as you may see. And today, the D stands for actually discovery. We're discovering the flaws of this cycle. We're going to see the first spark of a significant rebound when it comes to what the market is saying right now. Today we're doing a deep dive into the Dallas-Fort Worth, like I said, the multifamily sector of things. We'll talk about why the supply monster is finally being tamed. We're going to look at why the smart money is moving in the mid-cities of the Dallas-Fort Worth area, and what is the current interest rate environment. As we may see, you don't ever want to forget about that. Those will determine a lot of numbers, and those play into the factors of the next acquisition, the next waves of acquisition. And if you're looking at adding value in one of the most dynamic markets in this country, I'm talking about the Dallas-Fort Worth area, you're in the right place to tune in to listen to what I have to say today. So let's go into it. Let's dive into it. Let's look at what it means to say that you want to look at the pulse. I'm talking about the trends of the market. You want to consider the supplies, the demands, as well as what are the pivots of the 2026 market. You want to look at the supply and the demands. Now let's look at the numbers, the macro numbers first. We're coming into the first quarter of 2026 right here in the DFW area. Now what remains a fact is that the number one market in the US is still the DFW area. When it comes to apartment investments, the volume has hit nearly in excess of $10 billion over the last 12 months. But here's the kicker: the supply and the demand is finally leveling out. In other words, it's like a pivot, it's leveling out. So in 2024 and 2025, we see over 40,000 units delivered into the market. I'm talking about on an annual basis. Now, it has a lot of, that's a lot to be observed. But as of this time that I'm shooting this, I'm hosting this particular show, the construction pipeline has really shrunk to its lowest level since 2015, actually, since the year 2020. Now we're looking at roughly there about 30,000 units currently on the way, which is a 25% drop from last year, 2025. And what does this mean for you as an investor? Well, I'm glad you're asking. It means occupancy is becoming stable. Occupancy stabilization, which means, you know, when you look at the metro-wide vacancy, it's over between 10% to 12%. Now, that might sound high compared to the years of what you have in 2021. It's annual. Actually, the peak, we expect vacancy to tighten towards there about 9% by the end of this year, as delivery is slowing down. Now let's look at the rent growth. Actually, what does that mean for rent growth? We are seeing modest positivity in that area after nearly 30 months of slight decline in rent growth. It's now flattened that flattened out growth. So quarter one of 2026 is showing there about 1.8% to 2% uptick in asking in rent, in your leases, in your asking leases, in specific sub-markets, I would say. Now let's look at some hotspots. Hotspots, I will call them geographical hotspots. Where is the big places that you could probably hit a home run? Where is the alpha? Now, DFW is one giant market. It's a tale of probably two cities, not only just one bulk, but two cities, dozens of suburbs all around. Now, if you're looking for value add opportunity right now, you have to really dissect things in a very minute way. The suburban surge, I'm talking about the places like your not tollway corridors, the likes of Frisco, the likes of Plano, and even McKinney too, continue to be like a juggernaut, with corporate giants like JP Morgan, Chase, Liberty Mutual still expanding their spaces, their footprint. So rent by choice, demographic is keeping Class A occupancy quite resilient. So in your value add play, Fort Worth and the mid cities, let's look at that. If you're looking for Class B, your Class C value add, look towards South Fort Worth. Places like Arlington, places like Garland. Now, let's look at Fort Worth. When you look at the rents down there, the average rent is still hovering around $1,200, $1,270, which is incredibly attractive compared to the national average. When you look at the national average, you pull up the numbers, that's still quite moderate in terms of comparison in average. The affordability gap is still within reach. Places like Garland and Irving, these sub-markets are seeing some of the highest yields in the Metroplex area. We're seeing investors acquiring 80s and 90s vintage assets, putting in there about 15 to 20K per door in interior, mostly, sometimes tech upgrades in terms of some revolutionary value add, your smart locks, your thermostats, and lighting system. So, and usually that might bring in as much as 12 to 15% ROI. That's return on investment on some of these improvement. Now, let's look at the capital stacks. I'm talking about your rates. Your rates, and sometimes you could consider also the cap rates also too. Let's talk about the huge elephant in the room, interest rate. Now, as we sit here in April, the 10-year Treasury has stabilized. We're seeing lending rates in the borders of 3.6% to 4.6, probably 4.9 in that range, and the extend and pretend era from the bank is starting to fade. So things are getting better, I would say. We're ready to move, but they're still disciplined in their lending. So in view of cap rates in the DFW area, we held remarkably steady on an average range of about 5.5% to 5.7, probably 5.8%, and we are seeing this massive compression of the past, and quite honestly, that's a good thing for us as investors. It means price discovery is happening. Price discovery is really happening. Deals are actually penciling again without needing too much of assumption when it comes to rent growth. So, what will be my suggestion, or rather my recommendation? Let's watch out for negative leverages that are traps. Even with stabilizing rates, if your cap rate is lower than your borrowing cost, you're relying entirely on appreciation or aggressive operational upside. In 2026, cash flow is going to be king. Cash flow. Just watch your cash flow. Make sure your cash flow is on the good side of things. The prospects are good when you're underwriting your deal. So let's look at what are my predictions for the remainder of 2026. Well, let's see what quarter two says, the second quarter. Looking ahead to second quarter and beyond, here possibly 3 bold predictions for the DFW market that I could pretty much put out there. Concession burnout, that's those 4-week free thing that we would give, 8-week free special you saw in 2025. They are disappearing in Class A suburban assets. By say summer, they will disappear. They will probably go away. That's my take on that. Then AI integrations, property management is going in that side. If you're not using AI-powered leasing assistance and centralized management models to cut your operational expenditure rather by 10 to 15%, you're leaving money on the table. So you might want to get involved with AI on the management side of things also too. The build to rent boom, which is all over the Metroplex right now. You should keep an eye on that. You should keep an eye on that, most especially in cities like Princeton, Anna, and Selena. The demand for single family rental style living is outstripping demand for traditional apartments. Those are really things you should watch out for. So in my closing, those are my predictions actually. So we'll see what happens. Ultimately, it's always a good thing to wish that your investments do very well out there. So, but those are my predictions. So in closing, well, I haven't dived deep into the numbers here at the first quarter, the Dallas-Fort Worth apartment market update for the first quarter. The takeaway would be the oversupply narrative is becoming yesterday's news. The story of 2026 is about absorption, period. Then ultimately operational excellence. If you're an investor looking for boots on the ground, get collaboration in the Dallas area, just network more, get into the thick of things also too. So, and we're not left out of the mix of networking also too in the Dallas-Fort Worth area for us here at Commercial Property Club podcast, an extension of ST7 Investments. So give me a shout, send me an email, ola.i@commercialpropertyclub.net. Don't forget to subscribe to our YouTube channel, okay? Commercial Property Club podcast on YouTube. Leave a review, share this with somebody out there who's looking to grow their portfolio this year, 2026. You can also find me on LinkedIn. Also, I'm on Facebook, Instagram also too. We're present on that also too. My name remains Ola Ibiwoye, and this has been Commercial Property Club podcast. Until next time, keep adding value, okay, to your investments, to your network, to ultimately your overall involvement in income producing property. I will see you on that.